Hey traders, this is Christian from Hertz Tribeca Trade Group, and today is Tuesday, November 23rd, and this is your end of day market recap. Risk disclaimer should be in front of you. You got to scroll down there a little bit, but here it is. Here's a risk disclaimer for the day. Everything that we're going through is for information purposes only and education purposes only. If the screen is a little bit blurry, just give it a little bit more time for the YouTube the high definition version of the YouTube video to render. All right, so kind of a change of things as we went along the day. Well, some things, some things, definitely improved from where we were. We'll go over the price action in the indices. I wanted to start with the move in, excuse me, the move in yields. We have the 10-year yields. Moving higher again, or the 20-year yield, both of those moving higher today. The price of TLT was down 1.5%. Here's how this looks in terms of the 30-year bond futures. I could look at TLT as well, but we got definitely a change here. We're now lower than this area and this congestion area that we kind of went back and forth with. A lot of consolidation on the 200-day moving average, but for now, yields are moving higher. So we have not gotten back to where we were basically in October, but something to watch out for. Also, with just a little bit more of November left to go, there's some support down at 158.02. That could be where we're going. We talked about this as well as in the midday video. I kind of thought that yields look like bond prices look like they wanted to go a bit lower for the day. They did that. Yields higher. Same thing in TLT. We're now inside value, and support would be down there at 142.34. Again, differences between the maturities within those. I wanted to talk about one more thing too, is credit spreads. Not something that I talk about every single day, but something that I do definitely talk about in the member video. Are they shooting up here? Is this something that we have to worry about right now? Well, you could see, not yet, right? And that's basically what we said over the weekend too, is that yields are a little bit higher. They're off the low. High yield spreads, right? So this is IEI, which is shorter term treasuries matched for duration over what the duration is of HYG. So, duration matched. And you could see there's not any great cause for concern. If you look at the price chart alone of HYG, you could see it moving down. But what we want to look at is the relationship to treasuries, right? Because it's a spread over one over the other. So if you want to look at the 5-year chart too, I tend to look at the 2-year chart. Let's just bring this over here. So again, I do view when there's problems in the fixed income market, it usually moves over to the equity market. Right now, we don't have anything to worry about, but we'll keep an eye on that. All right, so that's bonds. But the higher yields, there's going to be some effect. Right, let's move over to the equity charts really quick. S&P futures were higher for the day. That's a nice looking hammer bar on the 20-day moving average. So we've been consolidating now for a couple of weeks. The chart that we went over pre-market that I thought was going to be important was the 1-hour level of 46.80. Notice that we took out a VPOC here in the early hours. And then we got rejected on the first attempt trying to get back into value. Tested the lows, managed to hold the lows, bounce, go a little bit lower, then bounce, and right back into value. So, I think overall that's a good thing. Also, if you notice, we're just basically back into the range of where we were last week, where we kind of went back and forth, a couple times last week. If you take a look at the top of value for last week, right, that is very close to the bottom of value for this week. Again, so why is this important? Volume at price is very important. We've got, important significant levels that showed up, the significance showed up there, the top of value last week. And I think first of all, the break into value, the VPOC takeout, a level that was taken out where we saw a lot of volume 2 weeks ago, a return to that and a bounce. All right. So overall, that's pretty darn good. NASDAQ. The first thing that I'm going to say about NASDAQ before I even talk about too much of the technicals is just remember, just to, again, keep things in perspective, that the NASDAQ got a little bit ahead of itself, coming into the week. Notice the volume that you could see too, a lot of volume going on. But whenever that RSI gets to around like very close to an 80, that the market is basically priced to perfection, right? And that's where we got in the NASDAQ, right? And we got a little bit clearly ahead of ourselves on Monday. Nice test of the 20-day moving average today and a hold, right? So I think that's what you want to see. Russell, which I think will be really interesting the next couple of days, is whether this bounces. We did get to the top of the value area, right? We sliced through the 20-day moving average. Notice that this 50-day moving average is lining up with the top of value. So, this would be a logical place for this to hold and bounce. Now, it doesn't mean that this bounces right up, but, maybe we get a little bit of outperformance over the other indices based on that support that we hit for the day. So, looking at so I wanted to go over, the technicals. The outperformance today was in the energy shares today. You can see XOP was up 4%, oil and gas names. XLE was up 3%. This basically, to me, this chart is just saying, hey, the breakdown may have been false. If you caught some longs in the energy space, traditional energy names, congratulations to you. But I think this is still a difficult looking chart. I don't really own anything in this space. I sold a couple things, right around in this area once they started to lean lower. I didn't really get caught in the move. Didn't have any major longs on in the group. You could see same thing here with XOP, which is equally weighted rather than XLE, which is market cap weighted. So you've got some smaller cap exposure here, but same thing. We're just basically back into value. So it kind of looks like a false breakdown. Do these things manage to break out and go higher? I don't know. I think that the chart. I think we could see I think that we could see a further bounce, but I think kind of too difficult of a chart for me. The Homebuilders, which have just been absolutely, acting wonderfully, really strong again today. And there was a couple of names that I wanted to go over here, but I don't know if you've seen this name, BLD. Just to give you examples, I don't own this one, but really nice strength in this one. One that I might be looking for tomorrow had some nice strength and is over the 200-day moving average, which is KB Homes. We know Lennar has seen some option activity too recently. That name, coming off of a little bit, a lot of these names got a little bit ahead of themselves too. The other day on Friday, kind of came back in a little bit, but holding quite nicely. All right, so that's really where the strongest areas of the market were. But you could see a lot of names coming back pretty decently. Also, the banks doing very well, right? If you look at the move in yields, they are one of the areas that do well when yields go up. So, also maybe a false move down there in the regional bank ETF, and just about back out to new highs there. XLF. Also, moving back above value, that level to watch is 39.94. And if you look at a couple names in the space, Goldman is a name that we talked about a couple times in the room. Very nice move there. I think Morgan Stanley could kind of shape up here if it manages to kind of stay where it is and stay above 101.50. Right, J.P. Morgan's another name that we've seen some calls. Bank of America is another name that we've seen some calls. But really nice move from the lows, 160 to 168. I remain long in the TTG trend portfolio, SIVB, which hasn't really been doing too much. And then another name that I've been long for a while is Jeffries, which dipped, and we'll see if it can kind of hold that 50-day moving average. All right. Talk a little bit about today's option activity that we saw. We did see a little bit more. I think yesterday was all over the place. Nasty end of the day yesterday. Today felt different, with the VIX climbing to, I think we almost got to 21 today in the VIX, right? And just almost 21, and then we trailed off. So for now, I mean, this could just be another bout of volatility. We'll have to see this kind of come back in and maybe get back below 1870. So that's something that I would be watching. That would be confirmation. But and maybe perhaps a little bit of fear. One of the things that I mentioned in yesterday's video is that we really haven't seen a lot of fear come into this market. The sentiment's been pretty hot. I still don't think the equity put call ratio is indicating anything, fearsome right now. But that could change, and it could get worse before it gets better. But I think overall the price action was pretty good. Keep in mind, the other thing to remember is that this is a holiday week, right? These holiday weeks can be a little bit dicey. I think that's what we're experiencing now. But really, if you're looking for a catalyst for why some of the growth areas have sold off, they've got very expensive. They were priced to perfection, right? So you have to remember that the market goes up and it goes down, and if you're a market bull, kind of like I am long term, you hope that some of these dips are shallow, right? But you just have to remember that we've come a long way in a short amount of time. So that helps putting things in perspective. If you've kind of if you've kind of lightened up as we saw some of those warning signals with market breadth over the last week, right? These are great clues that you can kind of learn from. And, when you see a breakdown in market breadth, that's a great place to say, hey, maybe I should be taking off some exposure. Maybe I should be making some adjustments, right? And those adjustments that we always talk about are having less positions on, smaller positions, and maybe not holding any short-term option risk, right? Or being very aware of what you are holding if you are holding any short-term options. All right, breadth for the day. You can see that breadth for the day was a little bit better, right? In the Dow, 20 advancing names, 10 declining names, 313 advancing, 192, and you could see so on and so forth. Let me go through a couple names here very quickly. Names that saw some option activity, DT, so Dynatrace, saw a whole bunch of calls. I did participate in that. Starbucks, which I think is very interesting here if it can get above 143.18. I did participate in that trade. It's a little bit preemptive because it's not outside of value, right? I would like to see it get back above 114 for confirmation purposes. Roblox saw some calls at the end of the day. A couple big days, down days. We'll see if this can find a footing in here. But I did see some calls. Maybe 107 if it continues to trail down, or 109 might be a better area, but they were buying some December calls in Roblox today. Unity, this is a name that I mentioned on Twitter last night. It's right into the 20-day moving average. Not a big bounce. I think it may need a little bit more time, but it's pressing to that previous breakout area. Right? Team was another one that saw a whole bunch of calls hit the tape in March. This has been a strong name, strong software name. It did take out a downside VPOC and it's holding. I would watch to see if it can hold 389, but note it's below the 50-day moving average. It's below the 20-day moving average. Again, they went out to March to give it plenty of time, but I'll be watching that one in the next couple of days. Arista Networks, very, very strong on earnings. Finally came in and met the 20-day moving average. Don't have anything on with this one. We'll be watching it. Palo Alto, still moving in the right direction, even though it was down 1%, holding the 5-period moving average. And then there's a couple other things too, like the rails. So if you've managed to get into a couple of these names like the rails, you've done okay. UPS is another name, sticking with the U's. UPS, that was a name that I actually took off today. Again, I'm just not really confident in this name. If that's why sometimes I take these names off. Also in the U's, UNH, really nice bullish engulfing candle here. I decided to take this trade off at the end of the day. I was going to leave a portion on, but again, for the rest of November, I'm just trying to be really tidy with positions and not have a lot of stragglers of positions. DOCM was something that I tried at the end of the day. As soon as it kind of went through and started to break down, went below my cost basis, I got out of it. I was just looking for momentum in the beginning of the day, but I think that name's really going to have to stay above 99. Right. Again, messy, big moves down. Again, just like some of the other software names, may need a little bit of healing. All right. So that's it for today's recap. Guys, have a great night, and I'll see you tomorrow.